Welcome back, friends. This is the fifth volume or the fifth video of PGBP Part 2 Admissible Deductions, and fourth video for section 32. Okay, now more videos are required for section 32, then only it will be complete. As you know, this is a very lengthy section and lot of provisions are there. Okay, so this video is for the intermediate students of CS, CMA and CS for the income tax paper for the assessment year 25-26, that is the previous year 24-25. Now let us see. Now we have covered actual cost explanation, different explanations we were covering, the 43.1. Okay, yeah, we were discussing about what is meant by actual cost and how it is being computed, and all these things in 43.1, from section 43.1 we were discussing. So in that different explanations were there. We have covered up to 5 explanations. There are a total of 13 explanations. So we have covered up to 5. Now let us consider the balance portion of this actual cost. Now next explanation is actually explanation 6, 7 and 7a. All these things together we can say in this fashion: actual cost to the transferee company, amalgamated company or resulting company shall be taken to be same as it would have been if transferee company, amalgamated company or the resulting company had continued to hold the capital asset for the purpose of its own business. So same cost or double DV at the time of transfer. I will explain it. Now let us consider the case. We have a capital asset, and the capital asset, okay, the holding company is having the capital asset. The holding company is transferring the capital asset to its subsidiary, 100% subsidiary, or vice versa, or subsidiary company is transferring to its holding company. That is the first case. So there is a transfer company, transfer company. Transfer company is the company which is transferring the company. Transfer company is which is receiving the asset. Or a second case is actually the amalgamating company is transferring the asset to the amalgamated company, or the demerged company to the resulting company of the demerged company. We know all these terms: what is the demerged company, what is the amalgamated company, what is the holding company. All these things have been already discussed. Okay. Now in such a case, when a holding company is transferring its capital asset to its 100% subsidiary, then amalgamating company transferring to amalgamated company, demerged company to resulting company. In such cases, how the actual cost is calculated? Then what is the actual cost in such case? In all these cases, the actual cost to the transferee company or the amalgamated company or the resulting company, amalgamated company or transferee company, being an Indian company, shall be taken to be the same as it would have been if the transferee company or amalgamated company or resulting company had continued to hold the capital asset for the purpose of its business. So that means there would not be any change. Whatever be the actual cost of the holding or the transfer company, the same cost, okay, will be applicable to the subsidiary company. There will not be any change, as if the transferee company is holding the asset from the very beginning. That fashion we have to consider. Actual cost to the transferee company shall be taken as the same as it would have been if the transferee company continued to hold the capital asset. It is continuing to hold the capital asset from the very beginning, okay, for the purpose of its business. When it is continuing, that means earlier also it was with the same company. Like that we have to think. So there won't be any change. Whatever be the actual cost for the for the transfer company, and the same cost will be applicable to the transfer company also. Okay. Now, yeah, some transactions some transactions are not regarded as a transfer. If a transfer of a capital asset by a company to its subsidiary company, if the parent company or its nominees hold the whole of the share capital of the subsidiary company and it is an Indian company, subsidiary company is an Indian company. Okay. Any transfer or capital asset by subsidiary company to the holding company, if the whole of the share capital of the subsidiary company is held by the holding company and the holding company is Indian company. Okay. Then in this case also the transactions are not regarded as a transfer. Now let us consider the explanation 8. Explanation 8. Okay. Now we have considered 6, 7, 7a. This is explanation 8. Interest on capital borrowed. Capitalization of interest in connection with acquisition of an asset. Now how we will treat the interest on capital borrowed? This we already covered. Then I am explaining once more. Interest relating to a period after the asset is first put to use will not be part of the actual asset. Mean up to put to use, whatever interest is there, that will be part of the capital cost. After that, it will be revenue cost. Till the time put to use, all expenses shall be capitalized and will form part of the actual cost. And after put to use, the interest will be revenue expense. Now, capitalization implies inclusion of such interest in the actual cost of the asset for the purpose of claiming depreciation, investment, allowance, etc. Now, explanation 9. Adjustment of claim of credit on taxes. Amount of duty of excise or additional duty leviable shall be reduced if credit is claimed and allowed. In case we are refunded or getting back the taxes already paid for excise or additional duty or GST, whatever taxes, if we are getting a refund, then that duty will not be adjusted against the actual cost. Actual cost of the asset shall be reduced by the amount of duty of excise or additional duty leviable under section 3 of the Customs Tariff Act 1975, in respect of which claim of credit is allowed under some excise rules. In case these rules are getting adjusted, then it is refunded, then actually this amount, the tax amount, to be reduced from the actual cost. Next is explanation 10. Subsidy or grant reimbursement on investment capital. Specific and general subsidy, grant or reimbursement. Whenever you get a subsidy or a grant from the government or maybe some other organization, and that amount should be, the subsidy should be reduced from the actual cost, where a portion of the cost of the asset has been met directly or indirectly by a state, central government, or any authority established under any law, or by any other person in form of grant, subsidy, reimbursement. Such amount will not be included in the actual cost of the asset to the assessor. Mean that cost, if you get a subsidy, that is to be deducted. In case a subsidy, grant, reimbursement cannot be directly related to the asset acquired and is for general nature, proportionate subsidy related to the asset shall be reduced from the actual cost. Now, explanation 11. Asset acquired outside India by an assessee, being a non-resident, and such asset is brought by him to India for the purpose of business or profession. In this case, okay, you are a non-resident Indian. You have acquired some asset while you were in the you were outside India. Then later you are bringing that asset to India. In such case, how the actual cost is calculated? Actual cost of the asset shall be reduced by the amount equal to the amount of depreciation calculated at the rate in force that would have been allowable had the asset been used in India for such purpose since the date of acquisition by the assessee. That is, actual cost will be WDV. What this means is that you will calculate the actual cost in such a fashion that that asset is been purchased in India, or the when you acquired that asset, from that date onwards you have to calculate the depreciation at a rate applicable at the time of transfer of the asset to India. Then for maybe after 3 years you are bringing back to India, then for 3 years you have to calculate the depreciation, and that is to be deducted from the actual cost. Then you have to calculate the WDV, and that WDV will be the actual cost of the asset when it is brought to India. Now, explanation 30. Actual cost of any capital asset on which a deduction has been allowed or is allowable to the assessee under section 35 AD shall be nil. Okay. Now 35 AD specific businesses. For specific businesses 100% deduction is allowed. In such cases, the actual cost is considered nil. Okay. Capital asset on which reduction is allowable under section 35 AD. Actual cost of the capital asset on which reduction has been allowed or is allowable to the assessee under section 35 AD shall be nil. This will be applicable in the case of transfer of asset by assessee where, and there is one case, second case actually the assessee himself claimed deduction under 35 AD. Now the assessee has claimed a deduction, 100% deduction under 35 AD. Then after that actually the cost of asset is nil because 100% deduction he has received, or when he is acquiring the asset from another person. Okay, then the previous owner has claimed the depreciation under 35 AD, then also the cost will be nil. Okay, actual cost will be nil. This would be applicable where the capital is acquired by the assessee by way of, then if the capital asset is acquired by way of gift, will, or irrevocable trust, by any distribution of liquidation of company, when a company is liquidated, okay, when it's wound up, okay, then also, okay, now also he has acquired in such a fashion, then also it is the cost, the actual cost is considered to be nil, or partial or total partition of HUF. Okay, Hindu undivided family. Transfer of capital asset by holding company to its 100% subsidiary or vice versa. Okay, some asset is being transferred by a holding company to its 100% subsidiary or vice versa. That case also the cost is considered to be nil, being an Indian company. By amalgamating company to amalgamated company, being an Indian company, by an amalgamating company to amalgamated company, demerged company to resulting company, being an Indian company. In all these cases, capital cost is considered nil. Any transfer of capital, intangible asset by a firm to a company as a result of succession of a firm by a company, or transfer in the course of demutualization or corporatization of the recognized stock exchange in India, and as a result of which the association of persons or body of individuals is succeeded by a company. Now, any transfer of capital or intangible asset by a firm to a company. A firm has transferred capital asset or intangible asset to a company as a result of succession of a firm. As a result of succession of a firm, actually, that the firm is actually by succession is taken over by a company. Then that case also the cost will be nil. Okay, the actual cost will be nil as far as the company is concerned. Okay, now, any transfer of capital asset or intangible asset by a sole proprietary concern is succeeded by a company. When a transfer of a capital asset of intangible asset by a sole proprietary concern is succeeded by a company, in that case also we can consider it as nil. Any transfer of capital asset or intangible asset by a privately limited company or unlisted public company to an LLP as a result of conversion of such company to LLP. A company is being being converted into at a LLP. So any transfer of capital asset or intangible asset by a private limited company or unlisted public limited company to an LLP, that case also the actual cost shall be considered nil. However, where deduction is allowed under 35 AD is deemed to be an income of the assessee in accordance with the provisions of section 35 AD being used for other than specific. All these cases we mentioned above, when it is being for the same use, for 35 AD only, means for specified users, means already 100% deduction allowed. That's why it is nil. Okay, all cases, whether it is actually been transferred from one company to other, from actually amalgamating company to amalgamated company, all these cases it is used for the specified businesses. That's why the cost is nil, because 100% deduction already available. But you are not using for the specific business, you are using for other businesses other than specific business. That case, actual cost of the asset to the assessee shall be actual cost reduced by the amount of depreciation allowable. Okay, when it is used for other businesses other than specific businesses, then actual cost of the asset to the assessee shall be actual cost reduced by the amount of depreciation allowable. The depreciation to be reduced. Had the asset been used for the business calculated at the right in force in the date of acquisition. So if you have transferred to other businesses other than specific businesses, then you have to consider that from the date of acquisition you have to calculate the depreciation, and that depreciated amount to be reduced. Then the balance amount, whatever WDV you are getting, okay, then you will get the actual cost. You have to deduct the depreciations. Actual cost of the asset to the assessee shall be actual cost reduced by the amount of depreciation allowable. Had the asset been used for business, in the business it has been used it has been used for the business from the very beginning and the date of acquisition, then actually accordingly you have to calculate all the depreciations, and depreciation is to be deducted from the actual cost. Then that amount will be the actual cost for the business. Depreciation in the case of amalgamation, demerger, succession, business reorganization, where in the previous year there takes place succession of a partnership formed by a company or a proprietary concern by a company, that is change in ownership, succession of a private limited company or unlisted private company, succession of a business other than by death, amalgamation or demerger company. In such cases, depreciation shall be calculated as if no change in ownership has taken place. So we will consider there is no ownership taking place. We will calculate the depreciation as if there is no ownership change. Okay. Then the amount of depreciation, once the depreciation amount is calculated, it will be apportioned between the predecessor and the successor in the ratio of the number of days of the assets were actually used by them. So the predecessor and successor they were using the asset, or actually predecessor has used for some days and successor has used for some days. As per the number of days, the depreciation is apportioned between these two. The depreciation shall be at first computed as if the amalgamation or demerger succession has not taken place. We will not consider that such an event has happened. Okay, so as if nothing happened, we will calculate the depreciation based on the rate of depreciation. Such deduction shall be apportioned between the transferee and the transferor in the ratio of the number of days for which the assets were used by them between the old and the new owner. Sale consideration, if any, received for the transfer of assets to resulting company is irrelevant in this case for the calculation depreciation. Ignore if given in the question. Okay, sale consideration is immaterial for this. Okay, we will not consider about the sale consideration. We will consider the actual cost only. We will consider the depreciation, and the depreciation will be apportioned between these two. Let us consider an example. Now there are two companies, A Limited and B Limited, and A Limited and B Limited amalgamated on 5/8/24. Okay, A Limited and B Limited, A Limited and B Limited amalgamated on 5/8/24. Okay, and there was an asset X with A Limited that of value of cost 1 lakh. Suppose let there be an asset X with 1 lakh with A. Then at the date of amalgamation, means from 1/4/24 to 4/8/24, it was with A. Once it is amalgamated, then from 5/8/24 to 31/3/24, the year is actually the year 1/4/24 to 31/3. From 5/8 to 31/3, it is with B. So we have to calculate how the depreciation as if there is no amalgamation. For the full year, we will calculate because it is the asset is with A from 1/4 onward. That means more than 180 days. That means full depreciation it will get. So for the whole year, we will calculate the depreciation. Means actually it's 1 lakh, 15% depreciation. That is, the block is 15% block. Okay. So the 15% depreciation, it is 15,000 rupees. Now from the asset X, with the A Limited, days of use, how many days is used? 1/4/24 to 4/8/24. That means 1/4/24 means actually April there is 30 days, May 31, then June 30, July 31, August 5/8 means August up to 4 means 4 days from here, total 126 days. And out of the August there are 31 days, and if you deduct the 4 days, there is 27 days. So with B, it is in August it was with it was in 24 days it was with B. Then you calculate the September 30, October 31st days, then November 30 days, December 31st, January 31st, and then February 28 days, and March 31 days, total through 239 days. And out of the 365 days, since it is not a leap year. If it leap year, it would have been 366 days. Okay, 126 plus 239. Okay, so it will come 365. So the number of days we will calculate. The asset was with A for 126 days, the X was with A for 126 days, and with B it is 239 days. So the total depreciation is 15,000. So 126 divided by 365 into 15,000, the A will get a portion of portion of the depreciation 5,178, and the asset was with B for 239 days. Therefore, it will get a 9,822. Like that, the depreciation is apportioned between these two. Now, let us consider another asset, because one asset Y was purchased for 60,000 on 6/6/24. That means the asset coming into the hold of A on 6/6. So 6/6/24 to 4/8/24, the asset is with A. So if you consider that 5 days, from 6 onwards, 6/6 to 36, that means 25 days it was with A in June, and July 31 days, August up to 4/8 means 4 days only with A. That means total 60 days. And with B from 5/8 to 31/3, that means the same 231 days it is with them. The total we are getting actually 299 days. So we can apportion between these two. It is actually 6 to 4/8, 60 days, and 5/8 to 31 days. So the total depreciation is at the rate 15% is 9,000. So 9,000 we will apportion between these two. Then we will get 1,806 for A, and 7,194 for B. Total 9,000 rupees. Now let us consider another case. One more asset was purchased on 11/10/24. 11/10/24 means already it is amalgamated in August. Now it is actually October. October also after actually 3rd October. Okay, 3rd October means actually less than 170 days only. So it will get 50% only. Only depreciation. Depreciation we can give only 50%. So Z was purchased, but when it is purchased, it is fully with B. So A will not get any portion of the depreciation. Only B will get. So depreciation is of the 80,000, 15% depreciation at 50%. Since it is used for less than 180 days, so 6,000 will be available to B. Okay, who is the successor? Okay. Let us consider another example. Sai Limited has a block of assets carrying 15% rate of depreciation, whose WDB on 1/4/24 was 40 lakhs. So Sai Limited was having some assets. The block of assets actually that depreciation is 15%. So from 1/4/24, okay, WDB on 1/4/24 is 40 lakhs. Purchased another asset on 1/11/24 for 14.4 lakhs. So and put to use same day. Sai Limited was amalgamated with the Shruti Limited from 1/1/25. So the date of amalgamation is 1/1/25, and at the time of amalgamation there are two assets with the Sai. One asset having WDB 40 lakhs, okay, and that asset was with the Sai from 1/4/24 to 31/12/24, because 1/1/25 it is amalgamated. From 1/1/24 onwards it is with the amalgamated company. 1/1/25 to 31/3. That means up to 31/12/24 it was with the Sai Limited. So the asset is with the Sai Limited from 1/4/24 to 31/12/24. That is 275 days. You can calculate it here. April 30 days. Like then, if you are calculating the total up to December 31st, it is 275 days. And with the Shruti Limited from January 1/1/25 onward. That means January 31st, February 28, and March 31st. The total 90 days. 90 days it was with the Shruti, and 275 days it was with the Sai. And the second asset was purchased on 1/11/24. Okay, so in case the second asset 1/11/24 to 31/12/24 for 2 months. It was with the Sai Limited. Okay, 1/11/24 mean 11 November it is 30 days, and December it is 31 days. Total 61 days it was with the Sai, and the balance it is with the Shruti only. That is the same 90 days only, because after amalgamation it is with the Shruti. Okay, so as far as the Shruti is concerned, it is actually the 90 days, both the assets with them for 90 days. But Sai is concerned actually the first asset for 275 days, second asset is from 461 days only. So you can calculate it here. So the block of assets, the two block of assets were there. Open WDB 40. See in the block for the block of asset, open WDB is 40 lakhs. Okay, it given. Then the one asset was purchased in 1/11/24. That will be 1/11 mean less than 180 days only, because after 3rd October it is less than 180 days. That is 14 lakhs 40,000. So when you calculate the depreciation, first we will calculate the depreciation. Depreciation we have to calculate. So we are calculating depreciation. Both the depreciation we are calculating first asset for 15 days. Okay, we will calculate for 15% we will calculate, and second asset we will calculate for 50% we will calculate. Okay, then it will be 10800. Okay, 1,08,000. First case it is 6 lakhs. Total 7 lakhs 8,000. It is the same actually. If you are considering it first, actually Okay, it will be the same for this first 14 lakh 40,000 is less than 180 days. Then actually out of the total 4,000 we will deduct the first assets, the asset for which the depreciation is less than 180 days. Then we will get 40 lakhs. For the 40 lakhs we will consider 15%. Then we will add together, we will get 7 lakhs 8,000. Okay. Then share of the SAI limit is for the 40 lakh assets. Actually we have calculated it was total 365 days. The full year it was 14231.3. See, it was we will consider as if there is no amalgamation. So for 365 days, 275 days it was the SAI. So 275 by 365 into 6 lakhs. So it will get the share of 4,52,055. Okay. And for the second asset, actually, it is acquired on 1/11/24 and with the SAI for 2 months, 1/11/24 to 31 total 61 days. So the SAI limit was 90 and 90 days it was with the Shruti. The total 61 plus 90, it is 151 days. Out of 151 days, 61 divided by 151 into 1,08,000. This is 1,08,000. So you will get the share. You will get 43,629. Now, as far as Shruti is concerned, it is for 90 days, both the cases. So first case 6 lakhs depreciation was there. So 90 divided by 365, it will get the share of 1,47,945. And for the second asset, 14.4 lakhs asset, actually only for 90 days it was with them. So 90 by 151 into 1,08,000, it will get 64,371 rupees. Okay. Yeah, let us consider a question here. Siddhant and Company, a sole proprietary trading concern, is converted into Siddhant Company Limited with effect from 29/11/24. Means when at the date of conversion 29/11/24, it is actually less than 179 days as far as the depreciation concerned, because up to 3rd October only 180 days will be considered. After that it will be less than 180 days. Okay. Now the WDP with the asset as on 1/4/24. So for Siddhant and Company is a sole proprietorship. It is not a company registered on the Companies Act. Companies Act registered, actually it should be limited, should be there. Then Siddhant Company Limited is registered under Companies Act, but Siddhant Company is a proprietorship company. Okay. So just because it is written and company, it is not a company. It's just right in the name. That's all. Okay. So as on 1/4/24, the items were in the block WDV was actually building 10% at 10% depreciation. WDV as on 1/4/24 is 3,50,000. Then for furniture, it is 10% depreciation. It is 50,000. Plant and machinery 15% depreciation, 2 lakhs. The total WDV at the beginning will be the total of all. Okay. Further on October 15, 24, still it is Siddhant and Company. While it is Siddhant and Company, it purchased a plant for 1 lakh at the rate of 15%. Then after conversion to Siddhant and Siddhant Company Limited, then it purchased one more asset. That is on after 29/11. That means it is less than 180 days only applicable. Therefore, you will get only 50% of the depreciation for this asset. Compute depreciation available to Siddhant Company and Siddhant Company Limited for the assessment year 25-26. In case of conversion of sole proprietary concern into company as per section 47(14), the depreciation is calculated for the whole year. First we have to calculate the depreciation for the whole year as if no conversion taken place. Then we have to apportion between Siddhant Company and Siddhant and Company Limited. Okay. So let us consider for the Siddhant and Company, for the assets, whatever asset is there, we will calculate actually at the time of conversion. So how many days the assets were there with Siddhant and Company and with Siddhant Limited Company. From 1/4 to 2911 it was converted. Therefore, up to 2811 only we have to consider. Therefore, April 30 days, like that. If you are adding the months total, you will get 242 days, and from 29 onwards, it is 29 November onwards, it will mean the assets with Siddhant Limited. For 29 and 32 days in November, and the balance days actually you will total together, you will get 123 days for Siddhant Limited. Okay. Then computation depreciation allowable to Siddhant company. So we know that the WDV was there for 3,50,000, and the depreciation 10% is 35,000 is the depreciation. Furniture WDV 1424, because it is actually we are calculating the depreciation as if there is no conversion. Okay, for the full year we are calculating the full depreciation we are calculating, because from 1/4/24 onwards it is with the Siddhant and company. So the depreciation for the furniture is actually for 50,000, and the rate of 10% it is 5,000. For P&M it is 2 lakhs. Okay, 1/4/24 2 lakhs plus one purchase is there on 1510. Okay, purchase is for 1 lakh 15, then the total 3 lakhs is there. So depreciation when we are calculating, we will calculate for 2 lakh 50,000 15%. For 10 lakhs only 50% you will get, because it is after 3rd October. Therefore 50% 15%. Therefore only 7.5% we have to calculate. So total you will get 37,500. The total depreciation is actually, you add all this thing together. Okay, so you will get actually 77,500. Of this actually only 70,000 for the asset with him, and from 1/4 onwards, and this 7,500 is only for the asset added on 15/10/24. Okay, so 70,000 is for existing machinery, 7,500 for the new machinery. So when we compute the proportional depreciation for 70,000, for 70,000, because actually the days are different. That this 70,000 WDV, okay, for this for 70,000 actually for the depreciation. 70,000 for the open WDV, the depreciation is 70,000. For the 70,000, it is with the 242 days. It was with the Siddhant and company, and 123 days it was with the, we are calculated here. 123 days it was the Siddhant Limited. So we had to apportion it. This 70,000 is to be apportioned between these two, Siddhant and company and Siddhant Limited, Siddhant Company Limited. So 242 divided by the total year 365 and 365 days, and you have to consider you have to apportion between these two companies. And with the Siddhant and company, it was with the 40, and the amount apportioned to Siddhant and company is 46,411. And as far as the new machine is concerned, new machine was purchased on 15th. Therefore, we have to consider that day also. Then 31 days are there. That means 17 days. Okay, from 15 to 31, it is actually including 15. It is 17 days. So 17 days in October, new machine, and in November 28 days. Then because from 29 onwards it is amalgamated for total 45 days. So after that it is with the, sorry, not amalgamated, it is converted. So from 29/11 onwards it is with the converter company. So the converter company, it was with 123 days. Therefore total together, okay, you are taking then actually 45. You have to apportion the asset 1 lakh. Okay. For that, the depreciation is 7,500. That you have to apportion between these two companies. And for Siddhant and company, it is 209 rupees to be will be the portion of Siddhantan company. Total depreciation for Siddhantan company is 46,111 and 2009 is 48,420. Now as far as Siddhant company is limited, company limited is concerned, it is actually the 70,000 is to be apportioned for 123 days and the 7,500 also to be apportioned for 123 days. The total will get 29,080 rupees it will get. Okay, and it has actually purchased a new asset 50,000 for 50,000 rupees it has purchased. Okay, after amalgamated after conversion means actually after November only. Okay, in 29 November, that means it is less than 179 days. So that case actually what it will get that 50,000 rupees you will get only 50 percentage 50 percentage 15 percentage. Okay, only half of the 15 percentage only depreciation you will get. So if you are calculating for 50,000 you will get 3,750. So depreciation allowable is total of these two you will get 32,830. Let us consider one more example. A Limited open WDP as 1424 is 1 lakh at 15% depreciation. Purchased a new asset for 60,000 on 6/6/24 and put to use on the same day itself. Amalgamated with B Limited on 5/8/24 and on 11/10/24 purchased a new machine for 80,000, 15% block. Company depreciation is allowable to A and B. Now, as we know, it is amalgamated on 5/8/24. Therefore, the opening WDV, whatever is there, the 1 lakh is there with A from 1/4/24 to 4/8/24. So 1/4/24 to 1/4 to 4/8. 4/8 if you are calculating up to 4. Only 4 days in August, 126 days. Okay, the balance, the open WDV, whatever asset was there, it is with the B Limited. For the balance actually, that asset is with the balance 27 days with the B, and if you calculate up to March 31st, you will get 239 days. The 1 lakh asset is with the A 126 days and with the B 239 days. But again, A Limited purchased one asset on in June 6/6/24. So that asset is with the A for 25 days. 6 you have to include 6 also. Then so out of the 30 days, 25 days it is with the A. Then the amalgamation taken place on 4th. Therefore total you have to consider 60 days it is with the A, and the balance 213 days after amalgamation it is with the B only. Okay, now you have calculated like that. Then again, B Limited purchased one asset on 11/10/24. Okay, 11/10/24 you purchased another asset, and in that you will get only 17% or only 50% of depreciation. Okay, whatever it is there, because it is less than 179 days. So it will get like that only. That depreciation will be only 50% it will get. So if you consider like that, open WDV for A Limited, you can consider for A Limited first. So open WDV 1/4/24 to 1 lakh, depreciation 15%, you can it will be 15,000. So new asset purchased on 6/6/24, so for 60,000, and at 15% depreciation you will get 9,000. So new asset B Limited purchased 11/10/24, less than 179 days, sorry, less than 180 days it is used. That will get only 50% of 15, that is 7% you will get. Therefore the depreciation is 6,000 for B. Okay, so Share of A means actually depreciation for the 1 lakh. For the 1 lakh actually depreciation we know it is 15 lakhs. So sorry, 15,000. So out of 365 days it was 126 days it was with A. So 126 divided by 365 into 15,000 mean it is actually 5178.08 mean is the share of the A. Then for the asset it purchased, the depreciation is 9,000 and it was with 60 days with the A. Therefore, total 60 plus 2, 39. It was actually 299 days. If you mean calculate the, if you apportioned it, you will get 1806.02. Total depreciation to A limited is the total of this, so it will get 6984. The B limited share depreciation on WDB 15,000 total of 239 days it was with the amalgamate company out of 365. Therefore, you will get the share 9821.91. So for the asset purchase from 6624, it will 239 days it was with the same 239 days it was with the B limited. Therefore, it will get 7193.97. So then B limited, I mean the amalgamate company purchased an asset on 1110. So it will get less than 179 days. The depreciation is only 6,000. So you total, all the three depreciation you have to add together, you will get 23,016 rupees is the depreciation for. Is the depreciation allowable for B limited? Okay. Now we will consider the case of a demerger. Okay, it is not explained properly in the syllabus. Even then, it is mentioned demerger the term. Therefore, we will actually discuss about this also. So, in case of a demerger, what will happen in demerger? One company is split up into more than one company, mean multiple companies. So, A limited is split up into B limited and C limited. Two companies are resulted. Okay, in this case, what will happen? Actually that asset was there first with the A limited. Okay, then it is actually demerged or split into B limited. Then that asset X was with the A limited. Okay, then it is after demerger the asset was possessed by B limited and not the C limited. Therefore, for that actually we have to consider the asset is B limited, then we have to the number of days we have to calculate till which time it is with the A limited and from when onwards it is with B limited, like that. So another asset why it was with the A limited before the demerger, then actually it is transferred to C limited. So the date we have to find out, and from that onwards we have to calculate the depreciation. Apportion, it was to be apportioned. Okay. Then another asset Z was with the A limited before demerger and it is transferred to C limited. Like that we have to find out. Okay. So we have now in the fourth video for section 32. Now we have maybe two more video maybe required for section 32. So we will explain the balance portion in these two forthcoming videos. Thank you.